Good afternoon, traders. This is Chris Buss with Traders Profit Compass with your Market on Close report for Wednesday, October 7th. Before I get into the charts, I want to say thanks to all my subscribers who took the time to fill out the survey that I sent out the other day. I really appreciate that. I got some really positive feedback and a lot of ideas for improving the service. So I look forward to incrementally making those changes as we go forward, and I hope you see improvement and being more responsive to the things that you say you needed, and I look forward to doing that for you. So okay, we had a big bounce back day today in the indexes. Let's dive into SPY 2-hour chart, starting off here. Yesterday we had the big rug pull into the close. President Trump has kind of flipped the script and now is, making noises about a la carte COVID relief packages and whatnot, and the market has taken that all as positive. So we gapped up higher, leaving this big gap below from 338 back down to almost 334. So we've got some air down below. You can see the gaps that I've got marked in purple, and we're right back up to the top of the range. So that's been a sticking point at this 4150, 342 area. We'll see if it can punch through in the days ahead, and if so, that would be the green light to get more fully engaged in long stocks, because we'd have a nice level to shoot against on the breakout. And that's predicated on the Qs breaking out as well, so we'd have that double confirmation. So we're right back up to the top of the range. Drilling down to the 30-minute chart, you can see the gap here and right up to where we were yesterday. So at the end of the day, there was a lot of noise in between, but we're right back to where we were. Do notice the negative divergences that we have on the chart, on the 30-minute chart. That's a yellow flag in my book. Now, if we break out, that's a reason to be cautious. But I don't think it's a reason to sit by the sidelines. What you got to be prepared for with these negative divergences in place is, the prairie dog, he pops his head up, looks around, and then fails, goes back under. Another way of saying that is just a false breakout. And remember what we always say, if we were to break out in the days ahead, 342, 343, 344, whatever it may be, and then fall back into the range, that's very bearish. So you'd have to flip the script immediately if we were to go out and then come back in. So keep that in mind as you're positioning and not only in the indexes but in your stocks as well. Qs, very much the same story. Rug pull yesterday afternoon, gap up, and right back up to 280. So in the days ahead, we'll see if they can, fill this gap and then break out above 283. You can see that there was a touch back here and the candle body right here at 283 way back when. So that's an intermediate resistance level for the Qs, and then we've got one at 285 as well. But really, if we can get past 280 and fill that gap, I think there's a good chance it'll make a run at this 283 and probably take it out. Again, notice the bearish divergences on PPO and on RSI. you'd want that to be turning up, and really right now it's just starting to. So again, that's a cautionary yellow flag. Here on the 30-minute chart, you can see those divergences again in place, with price right back up to the top of the range at 280. So that'll really be in focus for me as we close the week. I think that'll be really important, like where we are on Friday afternoon at 4 o'clock, whether we come up and fill that gap and then come back, if we get turned back tomorrow, or something in between. But definitely we're at a critical spot, just like we were yesterday and the day before, right up here at the top of the range. IWM had a nice day. I don't have the gap marked in here, but you can see it. We gapped up in the morning and then kind of made our way higher and finished near the highs of the day. Breaking through 160 convincingly would be a really strong sign for IWM. That's been a long-standing, going way back when, not even on this chart, 160 has been a sticking point. So I think as far as IWM goes, you'd like to see that confirming breakout of SPY, Qs, and IWM. And actually, that's a good sign of broadening breadth if you can get small caps breaking out along with tech and SPY names, large cap names. That would show some nice breadth coming into the market where small caps are also participating in the rally. Here we've got the 30-minute chart. I haven't fully developed all the levels, but here right at 160 you can see that that's an important level. Certainly wouldn't want to come down and break this uptrend line. That would be a bearish sign. So right now, it looks positive. We just got to see if we can get follow through and the breakout above 160, convincingly, not 30 cents or something like that, but really push through, and then you will have a great level to shoot against, because there's a mass of support below once you cross that level. So that would be a good line to shoot against. Let's go through the FANG names. It's just not happening for Facebook right now. We talked this morning that it had to, hold this 260 or 255 would be in the cards, and that's exactly what happened. We got the break, came down and tagged 255, and then bounced up to 260 for a back test. So if you're trying to trade Facebook, I think the bias has to be down. I've penciled in a downtrend channel. It would really have to take out this 261 level and break above this channel line to really kind of get something going and get back up here to 264 and make a move. But right now, for whatever reason, just not seeing a lot of bullish activity. And if you're trading it, I would be looking for bounces to fade, and this is a great level to do that, because you can see all the resistance there at 260 now that we've broken below. That's going to be a hard level to break above, so you can be short against 260, and if everything goes true to form, I think you'll come back down here to 255 at least. And if there's any selling in the broader market, a break at 255 brings you down here to 250. So, and then it will be back towards this big gap that we've noted. Apple, it was up 1.7%. I actually, late in the day, when I saw this break above 115, it was probably about 1 o'clock or 1:30. I bought some 115 calls for Friday, thinking it would, getting above that 115 would pop it. It didn't do anything. I just closed it out for a scratch trade. But that's your level. It looks kind of soggy. Anything below 115 keeps this 113 area as a downside target. And if it can get some momentum, your first stop would be this 116.50 and then 118 up above. But the large mega cap tech has been pretty soggy lately. Amazon had a good day, gapped up. This would have been a nice entry for those that were interested in trading it. Remember what we always say, recapturing a significant level from below is a buy. That recapture of 31.50 was your buy trigger, and then you got $50 out of it. Came right up to this 3,200, which was our next important level, and was stopped there. So tomorrow, if you got a break above 3,200, I'd be looking for 3,250, and if it gets rejected and they're selling in the broad market, I would expect it to come back to 31.50. These $50 levels have been working really, really well on Amazon. Microsoft, it was up. It's kind of soggy. The recapture of this 208 level would have been your buy point, and you got a couple bucks out of it, which is decent little trade. Now it just needs follow through to get up to 211 and see what it does at this gap, and then the big prize would be a break above 213 where it's got some room to run. So made a little progress today, recaptured the big rug pull yesterday and went above that, so that's a positive bullish sign when you take out that breakdown candle. But now it's all about whether it can come up and break above 211 and then 213. Netflix was a big winner today, and you actually had a really nice opportunity here if you were on your toes and it was on your radar screen. So we came down last night right to 505 support, which we've had marked for days and days. Gapped up, but opened below this 518, 520 zone. And once that broke out, that was your buy signal, recapturing that level from below. And you got a nice push. You got $15 there, just went straight up. That was a great opportunity, and I hope you captured it. Now tomorrow, notice this. Price closed above these two large volume over price bars. When you're below that, they're resistance, and when you're above that, they're support. So it powered right on through, closed above this 533, 534 area, above this resistance. So now that is support. So now you got an open door up to 545, and if it can break through that level, back to the prior highs up at 560, 570. So nice move for Netflix today. Saw a lot of order flow as well, looking for 600 out in time. So they're looking for higher prices on Netflix. Not going to spend any time on Google. It was basically, been dead money. It's been soggy. Opened, made it back up to resistance at 1465. if you got a break above 1465, you can be long, but it doesn't really seem like there's much power in Google lately. It's been pretty soggy, so I'm steering clear of that one. Tesla ran into 430 again, and that's been a problem for this stock. You can see it was rejected back here a few days ago. We had a touch here. I believe that was yesterday. Came down, rallied back up to resistance. Bulls have got to take out that 430, and if they can, they got a free shot at 450, but resistance is resistance until it's taken out. So, right here it spent 3 hours trying to break above, and it couldn't do it in a pretty strong tape. So we'll have to see, but definitely 430 is your pivot for tomorrow. Gold was kind of weird today. Futures were down fully 1%, and GLD really didn't move at all. Same thing with silver. Silver futures were down, and the SLV ETF was up a little bit, so that was a little bit strange. But still clinging to the story that we come back down to test this support again. NEO's a name we were in, had a good bounce back day. It was up about 4%. Tends to trade with Tesla. So I'm hoping that Tesla can break out of that 430 and hopefully give NEO a lift to break out of this little consolidation that it has here between 21 and 22. The big money maker today was this FSLY. We had gotten long, I believe it was yesterday, with some 105 calls. We held on it because it had acted well even in that sell-off yesterday. So we got a massive, 20% move today. And took out the old high, which is bullish. So I really want to stay long here. The measured move out of this structure is 125, $25 wide consolidation and a breakout, measures to 125. But with the size of this igniting candle and the fact that earnings are 3 weeks out, bodes well. Now, I've rolled up twice today. I rolled up to 115s, and then I rolled up to 120s at the end of the day. Just harvesting these profits, staying long, keeping my exposure about the same, and looking for higher prices. And I'm hopeful that we're going to get that. Now, just more broadly speaking, we're heading into earnings season, which is typically bullish, the lead-in into earnings. So what I'm going to be doing is looking for these plays that are where earnings are in the 1 month to 2 months out, and start seeing if we can get some movement and jump on some of these pre-earnings runs in some of these stocks that are starting to break out from recent consolidations. That would work out great if we can catch a few of those. Yields were back up today, so treasuries were down. Keep that 158.25 area in focus. If yields keep going, not a lot of support down here below 158, so that could be a really nice trade. Set an alarm in your system there at 158.30, 158, something in there, where you'd be interested in taking a short trade on treasuries if the bottom falls out. AMD is one I want you to put on the radar. This is a 60-minute chart. You can see we had this is the value range, where all the transactions have taken place. Earlier in September, we had a breakout up to the low 90s and then came back into value. And this is a good study, and it kind of reinforces what I've been trying to show you guys. Once you break out of the range and then you break back into it, it's very bearish. Look at how far it fell, from 87 to 75, right back down to the bottom of the value range, and then built from there. Now, do I wish I would have caught it down here? Yeah, of course, but I didn't. So now we're back up here at this 87 level. If it can break above, I think that's a good long that you can take. Second time back out of the range, I would expect a run back up to the low 90s. So set yourself an alarm, and if we can get a good entry tomorrow or in the days ahead, right above 87, I really like that long, because you can see that just above is a price void, and those are the ones that I really like to capture as price moves into it, because there's not a lot of resistance there. XRT, we had talked about this a couple days ago. If you got long, you're sitting pretty. We're right back up at the highs, and if we were to break out here, and it's already emerging, I like that long. Why? Because all-time highs are a buy. Remember that one. All-time highs are a buy. So if it can break above the all-time high here at 53, we'll have all this support below, and then we can hold on and see how high it can take us. And that was, recall, that was our same strategy back here. Right here was an all-time high. So all-time highs are a buy. We jumped on. We caught most of this ride. We got out. And now we can get back in. So I really like that setup for tomorrow and the days ahead. And remember, if we get that stimulus, between now and Christmas, a lot of that money is going to find its way to, retail for Christmas shopping. So that may be a trade that has legs to it. All right. Big bounce back day. We'll see where it takes us tomorrow. If it was just, rally back up to resistance and it rolls over, or we make a power move out of the range and then get our triple confirmation. SPY breakout, Q's breaking out, and IWM breaking out. I mean, it wouldn't get much more bullish than that. And so we'll just have to see if we get our signals and then be ready to roll. So thanks for spending some time with me this afternoon. I hope you had a good day of trading. We'll jump on it tomorrow, bright and early like we always do. If you're new to the channel, please subscribe and you'll get all my content whenever I publish stuff, which is every day and often multiple times a day. And certainly jump over in the show notes where you can get links to the blog site and how to register for my content, so you can get all this stuff in your email box. Sorry about that. Okay, we'll have a good evening. This has been Chris Buss with Traders Profit Compass. Talk to you next time.